There's a fight between you and something that keeps sucking money out of your life. And this has been going on for so many years, to the point that you get exhausted, tired, and almost ready to give up. Simply because you're losing hope. You think there's no way around, and that maybe you'll have to do the hardest thing, filing bankruptcy. And unfortunately today, individuals, couples, families deal with the situation of fighting against debts towards creditors, and they simply want to have a better financial life, but they don't know how. And so today I'm making this video to make you understand how you can fight back against your debt. So by the end of this video, you'll at least know some strategies, what to do, what not to do to get out of debt slowly or as fast as you want, and actually starting to create true wealth in your life. My name is Fabio Boulle, and I am a financial coach, and I create these videos to share my experience with over 15 years in the financial industry so that it helps you make better financial decisions for your present and your future. So if you're new to the channel, don't forget to like and subscribe to the video, as well as share it so that we can help grow the channel. And right now we have our first milestone of getting to 100 subscribers, and I'll be eternally grateful if you could be part of this help that I need from you. So perhaps let's define a few things. What is debt? Well, debt is simply an obligation of an individual to pay back borrowed money to a creditor. What is a creditor? Is a person who extends debt and is owed the debt. And when we talk about debt, a lot of people like to talk about a good debt, bad debt. Perhaps what they mean is secured debts, debts that have collateral assigned to them, and it could be from auto loans or car loans, mortgage loans, or even in some cases HELOCs, meaning home equity lines of credit. And what that basically means is you can just borrow some money versus the actual value of your house. And that's probably what they consider as good debts. Unsecured debts, maybe bad debts. It's like credit cards, student loans, buy now and pay later, which is a horrible idea, if I may say. Legal fees, overdrafts, governmental bills, any medical bills, and the list goes on and on. And when we approach debt, it is important to understand that it is a means to help for a short period, but overall, you are giving money to another institution, whether you're paying it off in interests or in time. And before I decided with my wife to pay off 80% of our home loan, I realized that if I didn't do that, I would be paying almost 3 times more of what I actually borrowed in a 25-year period. And if you know how banks work, first you pay the interest as quickly as possible, and then you pay the principal, which is like the actual amount. And say if I would now go and do a car loan to buy a new car, cars are known by their devaluation, in the sense that after 1 year probably you lose 25% of your actual value of the car. And in many cases, if you have a car loan and then your situation you actually have to sell the car, you can find yourself owing more than actually what the car is valued at, which is a drastic situation to say the least. But we can also use different types of methods to not be involved into debt. Let's start at the point of, let's say you realize that you had enough. You can't keep living paycheck to paycheck. And let's say you actually want to make changes in your life. Technically speaking, in terms of a budget itself, it is only through budgets that you will win financially, because you know how much it comes in and comes out in your life, financially speaking. Once we understand what we want to do and we find the meaning of the why, we need a process of getting out. And there's several different approaches. I tend to focus on 2. Either what it's called the debt avalanche, meaning you attack the biggest debt or the debt with the highest interest rate immediately, so that it creates, let's say, a buffer and towards allowing you to have more breathing room. Or The other one, which is also well known, is the debt snowball, which is you start very small and you just get momentum, and it becomes bigger and bigger to the point that you get so much momentum and you see the actual results and the gratification of the results. And so, personally speaking, I have kind of a twist. I'll give you an example. If I had a car loan and if I also had student debts, and this car loan was worth, let's say, 10,000 euros or $10,000, and I had a very short-term student debt, which was worth, let's say, $4,000 or even $5,000. But that student debt, with a period of 3 years in time, would actually be charging me, on average, per month, about $400 or euros per month that you'd take out from my budget. And let's say I have a budget of $2,500 per month. And if we add to that, my car loan would be, let's say, $200 per month. And in a situation I actually have the opportunity to pay, I have the cash to pay both. In very much sense, I would, in this case, tackle the one that actually affects most of your budget, even though that perhaps it doesn't have the highest interest rates, but it affects most of your balance sheet on the budget. Because if I have a specific monthly payment of, in this case, $400 for my student loan, and then I also have $200 to pay for my car loan, if I immediately pay off that $4,000 of student loan, it will create a lot of breathing room in my budget, because then I can use that extra money that I would have normally pay the student loan to the car loan as well. So I can use a lot of that intensity to ensure that I still have some funds aside for my emergency fund, as well as I now remove that $400 that I would pay to my student loan, and then suddenly I have that extra money that I can put aside so that I can just make my payments a lot higher, as opposed to just being more comfortable and maybe spend that money. And so this is a few ways that I found it that is maybe easier, but it's just, for me, starting with the budget itself, how much you're earning, how much you're spending, and then utilizing all that ammunition to pay off as quickly as you can. And first of all, getting more fresh air in your life, financially speaking, because no one likes to have all these different things where you have to just keep working, just pay off debts and debts and debts. And it just becomes really demoralizing. And it's just a sad way of living your life, because in the end of the day, we want to do the things that we want to do. We want to be accountable for our own selves, not to others, or not the obligations of paying something else that we don't want to. This is where, biblical speaking, in Proverbs 22 says, the borrower is slave to the lender. I believe that no one wants to be a slave to anything. So why are we going to be slaves to lenders and actually give our money to someone else? But, each situation is different. And in some cases, we even have what I like to call rich, broke doctors. Doctors that could be just general practitioners, earn quite a good living. Some of them could make $200,000 a year, and still they don't know where the money goes. And when they have this extraordinary income, to the point that they will have a great retirement if used correctly, some of them are not doing that, and it causes so much friction in their lives, especially in their families, because they make so much, and in the end of the month it's like, oh, where's the money? I don't know. And it's happened. It's an unfortunate way of giving yourself so much into the job, but then not actually saving your future, in one sense. And in some cases, you can actually become behind payments, which becomes a very tough situation to be. Because if you start not being able to pay your debt, that debt is going to just accumulate. Because with the interest coming in, you're just going to keep going up and up and up, and it becomes a spiral situation. And this is where people tend to give up. And I'm here to tell you, as a financial coach, you don't need to give up. We just need a better process. And the first thing to do when we are behind our payments is, one of them, protect our four walls. And what that means is make sure that we pay our house, we pay our food, and we pay our transportation, we pay our clothes. Second of all is to talk to the creditor. People are afraid a lot of times to speak to the other side. And in fact, what is useful to do, instead of being chased, is to chase. It's to over-communicate and plan out a situation that, okay, listen, I can only afford X right now. But then you follow through. And if you speak to the company, the creditor saying, right, this is a situation, I know I'm behind 3 months on these payments, but at this moment, I can only afford to pay this amount. And then, once you've spoken to the creditors, if you have 1, 2, 3, 4, you follow through, but you continuously keep communicating to the point that they stop, probably in many cases, stop communicating with you because it's just annoying that this person, like I know, is behind payments, but we are having some sort of contact and communication, and it's so much better than just freezing and saying, oh no, they will go away, because it will not go away. In many cases, student loans, they will not go away. Now, it could be cases that they could be forgiven, but in many cases, if it's like private loans, most likely no. If it's maybe more of a government loan, there's more leeway. But if you stop even paying loans that are part of the government, they probably have the right of coming directly in your bank account because it's something that you owe directly to the government, whether it's in Mauritius, whether it's in Europe, whether it's in US. And this is where, for instance, taxes. If your government taxes, they will find a way. And so it's really important to not stress out, but be the solution and communicate with it, whoever you need to communicate, whether it's a credit card bill, whether it's a student loan, whether it's a mortgage, whether it's a car loan. It is just very imperative to over-communicate with a creditor that you owe them the debt. Because if you don't, they will knock, they will call family members, they will ask, and it's going to be awkward in many cases because these creditors, they don't care. You're just a number. They don't care. And they're probably going to bully you, which is probably not really allowed, but they will try. And they'll try to intimidate you, and you need to pay back. So if you could do a few things, is as a coach, my recommendations would be sort of, let's look at the budget, let's see how much you owe, let's see how can we attack this first, and let's see also how much funds you actually have right now that could help pay off all of this. And at the same time, make sure that you don't get into more debts. Because if you don't have any emergency funds, or if you don't have any cushion, you will get in more debt. And so through different strategies of approaching either debt avalanche, debt snowball, or just looking at the biggest picture in the balance in the budget, we can understand what are your patterns and how we can actually navigate this. If depending on the amounts of debt, it can take up to 24 months, or it can take as little as 6 months. It really depends on how much debt and how much income you're bringing in every month. But when there is life, there is hope. And that's how a financial coach comes in and guides you through this process. So if you have any questions, specifically on debt management, comment below. Let me know if there is any specific area you'd like me to touch, whether it's foreclosure, whether it is when you're in delinquency, whether it is when you are not able to actually pay any debt, what should you do? And I'll be happy to help. One last thing in terms of buy now, pay later. Please do not do this at all. Because if you decide to, let's say, follow through this and go through the program of buy now, pay later, and you miss one payment, your interest rates of that penalty will go through the roof. I have seen reports of some cases they make over time something like over 60 or 65% in interest payments on these buy now, pay later programs. And half your money is going to the lender. We should get that 50% or 60% back into our pockets so that we can invest for our futures rather than giving money to someone else. So since I've learned many of these things, it actually makes me very upset, and I'm here to help, and I hope this video was helpful for you. So I'll leave it at that. I hope you enjoyed this episode. If you did, don't forget to like, subscribe, and comment below with a question or comment or anything. And don't forget to share this video so that we can get to the 100 subscribers that I am looking to get to for this brand new channel, and I hope you can help me get there. So I wish you a wonderful week, and I'll talk to you in the next video. Bye for now.